Good morning. We will pay attention to the effect of transactions today. You have to indicate whether the following transactions will affect equity, assets, liabilities, income, or expenses. So what we want to see in this question is if you know which entries will affect current assets or non-current assets, current liabilities or non-current liabilities. You must not indicate whether the amount is increased or decreased. We didn't ask that in the question. If you're unsure how to answer the question, look at the example and see what did we do in the example. In the example, we said issued a check for wages. So that means we indicated that money will go out of the bank. Bank is a current asset, and the expense that's paid is wages, so that will affect expenses. The owner deposited 90,000 in the bank account. So one account will have to be one of the owner's accounts, and the other account will have to be the bank. So money is put into the bank, so current assets will increase. The owner has two accounts in the business, capital and drawings. If he puts money into the account, it will be capital. If he takes money out of the business, it is drawings. Equity means the total amount of money that the business owes the owner, or the total amount that the owner invested in this business. So if he puts money into the business, we will show that that will affect equity, but it will be in the capital account. Issued a check for 30,000 to purchase equipment. Check means that we take money out of the bank. Equipment, that is what we receive in exchange for the money. Now, those will affect assets, but we have to distinguish between current assets and non-current assets. Current assets are things that belong to the business that will change regularly, sometimes from day to day, but at least within the next 12 months. So we will show that the bank is a current asset. Non-current asset you use for a long time, normally for more than 12 months in the future, the value will stay the same. So that is a non-current asset. Bought hair products on credit. So that means that we receive the products that we will use in the business to do the hair of the people. So that is our consumable stores, or you can call it hair products, and that is an expense for the business. We didn't pay the money immediately, we bought it on credit, so we owe money to the creditor, and that is a current liability because this will have to be paid within the next 12 months. Non-current liabilities is long-term liabilities that you will pay back longer than 12 months in the future. Deposit 22,000 in the bank for services rendered. So one entry will be in the bank and the other entry will be services rendered. So bank is a current asset. Services rendered is an income for the business. So in some businesses, trading businesses, they will sell goods to make an income so that they can make a profit. In a service undertaking, they don't sell goods, they render a service, and that is the income that will give them money and a profit at the end of the year. Issued a check for 900 to pay electricity. So the one account will be electricity. If we issue a check, the other account will be bank. So bank is a current asset. Electricity is an expense because it decreases profits. Obtain a loan for 10,000 from Absa Bank. So the one will be loan and the other one we will put into the bank account. So it means that we will show this effect on your normal bank account. Long-term loan that we obtain from Absa will be paid back over a long period. so it is a non-current liability. Issued a check for 2,000 for the private use of the owner. Check will be bank. If it's for the owner's own use, it means that it will be drawings. So if the owner gives money to the business, it's capital. If he takes from the business, it's drawings. And this was cash, so it will affect my bank account. You must read the instructions carefully, ensure that you understand what is expected of you. Indicate the effect on equity, assets, liabilities, income, and expenses. That is the required part. You were not required to present the amounts or if they increase or decrease. The purpose of this account is to test whether you know what is assets, non-current assets, and current assets, liabilities, non-current and current liabilities, equity, income, and expenses. If you're unsure how to do the question, look at the example so that you can see what you are supposed to answer. In question 2, the owner increased his capital contribution from 80,000 to 100,000. If we look at the example, they said a check was issued to Pretoria News for 1,400 for advertising. Okay, so here we indicated that you must show whether the amount will increase or decrease assets. Because you take money out of the bank decreases with 1,400. Advertising is an expense. Expenses decrease profits. So that means the owner will get less profit, so the owner's equity will decrease with 1,400. And the reason for it is that you paid advertising. If the owner increases his capital contribution from 80 to 100, you must read carefully. It means that his existing capital was 80. You increase it to 100, not with 100, to 100. That means that we increased it with 20,000 rand. Money was received in the bank, so 20,000 increased in the bank. The bank is an asset, so assets increase with 20,000 rand. The owner contributed money, so it means that the equity increases with 20,000 because capital increased. When the owner gives money to the business, owner's equity increase. When he takes money out of the business, owner's equity decrease. Owner's equity means the total amount of money that the owner has invested in the business and the total amount of money that the business owes the owner. Received 12,000 for services rendered. Money was received, so the bank will be affected. Where did we get the money from? The services. Money will be put into the bank, so it means that the bank increases with the money that was deposited, 12,000. Services rendered is an income. Income will increase profits. The owner will get a bigger profit, so the equity will increase with 12,000 rand. Purchase a vehicle on credit for 60,000. We receive a vehicle, we don't pay for it immediately, so we buy it on credit, so we owe money to our creditors. Vehicle is an asset, so assets increase with 60,000. Because we didn't pay for it, it is a liability because it's a responsibility for the business to pay this money in the future. So liabilities will increase because we owe more money to the creditors, and it will increase with 60,000 rand. Issued a check for 1,400 for repairs. Money went out of the bank. What did we pay? Repairs. So in the assets, we will show that the assets decreased with the 1,400 that was taken out of the bank. Repairs is the expense, and expenses will decrease the profit, so equity will decrease with 1,400. Issued an invoice for 3,000 to P&L for services rendered. The owner agreed that his friend can pay this money at the end of the month. So at this stage, this person owes the money to the business, so he is a debtor if he owes money to the business. Why does he owe the money? For services rendered. So we will indicate that assets increase with the 3,000 because the debtors increase, they owe more money to the business. Services rendered is an income that will increase the profits with 3,000 rand. Receive an invoice for 300 from Can for stationery bought on credit. We don't pay for it immediately, so it is a credit transaction where we owe money to the creditors and we bought stationery. Stationery is an expense that will decrease the profits with 1,300. Creditors is a liability that increases the amount that we owe to other people with 300 rand. A check was issued for 200 for the personal use of the owner. Money went out of the bank. The owner takes things for himself, so it means that we must take it to one of the two owners' accounts. If he takes anything from the business, it will be drawings. There is less money in the bank, so bank decreases with the 200 rand. Drawings is the owner's account when he takes from the business, and that means that business owes him 200 rand less, and his equity decreased with 200 rand. Issued a check for 150 for airtime for the cell phone. So money went out of the business to pay for the telephone. The bank decreases assets with 150 rand. Telephone is an expense that will decrease profits with 150 rand. Read the instructions to make sure that you understand what is needed. Then you complete the table to show the effect on assets, equity, and liabilities. The reason for the effect should be given because it was required in this specific question. Look at the example if you're not 100% sure how to do it, that it is an indication of how the question should be completed.